We've had a major run up this year in stocks. It's undeniable. The market's been on an absolute tear starting in January, but it really took off in March. That's when things went to the next level higher. But today, when you look at the heat map of the S&P 500, you see that there's some big changes. The Magnificent Seven are no longer leading the way. They're in a pullback, and we see that there's been basically a rotation over to healthcare and into some other sectors, some more defensive names. So does that mean that the big tech run is over? There's no upside potential left in any of these plays? No, it just means that when you begin to see rotation like we're seeing today, it's a very strong indicator that the momentum and the focus on big tech is coming to an end. I gave that warning in Tesla the day before earnings and the day of earnings. I was telling you guys that the momentum to the upside was slowing. And so the likelihood that we were going to push through 300 and hit 320 and 340 was seeming more and more unrealistic. And I think if you look at this heat map from today on the S&P 500, you clearly see that we're losing momentum in the big tech names. It doesn't mean that the run is over. It doesn't mean that all of these have gotten as high as they'll get, but it's an indicator telling us that we are soon going to be at the place where we've hit and booked the top on all of them. I actually don't think that's today, so I'm going to go over some of them with you, and I'm going to give you guys those key levels of support and where I'm going to be incentivized to put my hard money back at risk and to get back into these. All right, if we go back to that heat map for just a moment, I want to point out one of the stocks that's been on the move today, and that's Johnson & Johnson, ticker JNJ, aka a boomer stock. This is not one of the cool and sexy, innovative stocks that's changing the world. Personally, I think Johnson & Johnson is part of the trouble that the world has with some of these big pharma companies and these companies that influence products, sometimes to the negative, but there's something very valuable I'm going to point out to you guys in this move up of Johnson & Johnson and this rotation out of big tech into companies like this. The surge up on Johnson & Johnson was on some positive news. Basically, they had some great forward guidance by their CEO. I'm going to quickly give you guys the support and the resistance that I see in this stock, but I'm also going to talk to you guys about the significance of this stock popping today. I see support at $165.40, and up above, it seems inevitable to me that it should at least hit $174 before this move up cools off. And with this rotation into healthcare, I'm going to give you my favorite boomer stock pick. I'm going to let you guys know which one that is in this video, and I'm going to tell you guys where my buy price and my target is going to be and why I like it. But that's coming up after my Tesla coverage and after I've touched on a few other stocks. This is the Stocks with Josh show. Thank you guys for tuning in today. Thank you for hitting the like. Thanks for all the new subscribers that joined the page, and I appreciate all the comments I get. I don't have a chance to get back to everybody, but I do try. If you don't have a question, just throw a heart and say hi in the comment section for me. All right, we've got a monumental week coming up in the markets. Next week, Tuesday, we've got Microsoft and Google reporting earnings. Now, you know that I favor Google, and I'll definitely be covering it more between now and then. And then next Wednesday, we've got the FOMC decision. I think it's pretty predictable at this point. People are expecting a rate hike, but it's going to be the conversations and the dialogue that occur afterwards that's going to move the market one way or the other. I'm personally hoping that the economy remains strong and that we can continue in this bull run, and that the Fed comes out and he's a moderately hawkish that would signal to me that he believes the economy is going to remain strong, and some of our favorite stocks can continue to improve their profit margins and the stock valuations can continue to climb. We also have on Wednesday Meta's earnings. That's one to watch. I'll be covering that as well. Thursday, we've got Amazon, and you guys know that I favor the Amazon. I'm in an Amazon play right now, and I'm hoping that we break up above $140. Then you've got the following Thursday, so not next Thursday, but the following Thursday, that would be August 3rd. We've got Apple's earnings, and that's going to be a huge one. As I say on this show, Apple stock is more than just a company, more than just a stock. It's an indicator to me. And if we see the stock surge higher, it means it's going to make room for some other stocks to continue to go up. If we see a massive sell-off or some form of a disappoint move, then we're going to know that we're going to move sideways and the market's going to go into correction and we're going to go into contraction for a while. So Apple in about 2 weeks, 10 days is going to be a massive market mover. We'll have to keep our eyes on it. I'm also going to cover a little bit of Apple today. I wanted to refine my price entry for you guys, give you an update on what I'm going to be doing with my Apple trade coming up. I'm not in Apple right now. I'm looking to get in for a beautiful pop. I'm hoping to get some call options, and I'm personally aiming for a 200% profit markup on that play. I'm going to refine my technicals for you guys today, and I'm going to show you exactly where I'm hoping my entry price will be. So where do I get my news and how do I keep track of upcoming events? Well, you guys know I do it with the moomoo investment app. I use moomoo especially during earnings seasons right now. I use their stock screener. I love their 8 different conditional order types. If you don't have moomoo and you're new to moomoo and you want to add a new trade account, they're offering to give away a ton of free stocks. You can click on the link in the top pinned comment to get all of the details. They're giving away a cash bonus and up to 16 stock. Once you download the app and you start investing and you get your free stock, I host a chat group on the app called Stock Josh Fam. You can go over to your app. If you look at the top right, you'll see a bubble with 3 dots in it. You select that and you get a little search icon. You search Stock Josh Fam and then you can join the conversation that we've got over there. All right, let's get into Tesla. Before we do, we're going to have a little class. I'm going to teach you guys a new stock market term you may not have heard before. It's a little bit unusual. This is called perma pamper bulls. You might ask, Josh, what is a perma pamper bull? That is a permanent bull trader who does not believe that any stock will ever come down, but we've simply added the pamper term to them. So they're the perma pamper bull because they tend to be big crybabies when their stocks do finally come down. Now, I'm not going to make fun of anybody that stayed in Tesla. Tesla is a great company. It's a long-term hold. I've got some in my retirement account, so I am bullish on Tesla. But as I had warned 2 days leading into earnings, the charts were telling us that things were absolutely slowing down and the likelihood that we were going to shoot above 300 was really decreasing. So it was wise, especially if you were in a leverage trade or an option trade, to take profits when we peaked up. So we don't want to be a perma pamper bull. I think the pullback on Tesla was a much needed reality check for all of us investing right now in this environment, and an awareness that stocks have obviously gone up quite a bit. But we are not going to get scared. We're just going to get prepared by looking at the charts. And so I'm going to give you guys the technicals that I see. We're going to keep it nice and simple, and we're going to trade the range. So Tesla dropped about 10%. It dropped $28 in the last 24 hours. It did it on earnings. The big problem, as I saw it, was that the profit margin came in at 18.2. Some people will tell you that that was good enough. I don't think the market thought it was. I think if it had come in at 19% and even a little bit higher, 20% obviously would have knocked the ball out of the park, but 18.2% was just too low. But then the really big problem was that Elon suggested that there could be new price cuts moving forward if demand slowed. He basically said that he's going to be watching it and he's not committing to the market to maintain profit margins. His commitment is to growth and to grinding out and pushing out vehicles for big bucks. And that's what he's telling us. That's what he's going to do. The market doesn't like that because that's a threat to profit margin and that erodes profit share value. Simple 101 Wall Street. The uptrend that we were enjoying was unsustainable. It clearly was in the overbought territory. And today we saw a low price of $269.46 when I looked at it last, and a high price of $280.93. So here's what I want you guys to be aware of with Tesla right now. A typical pullback for Tesla has been around 15%. That's been achieved 25% of the time. And so the pullback that we're seeing is not at all unusual. That's a positive way of looking at it. The trade volume today was up 32%. And if you recall, I've been telling you guys that the trade volume was going down when the price went up. And so you also need to understand that if the trade volume goes up when the price is going down, that means there's more momentum to the downside, but even more importantly, more momentum to the downside coming. That's what that means. We would want to see the selling volume go down if the stock was going down for us to believe that there was going to be a quick reversal. Right now, the volume today tells us that there is more downside potential in Tesla. I'm going to tell you what that downside is. So I see support at $260. Now that, if we got down to $260, that would be an additional 4.5% drop, which would give us that 15% pullback, which is typical for Tesla. Now, resistance above is at $290. Now, resistance above is at $290. That would be a 7% jump from its current price when I last looked at the charts, and that's going to be our trade range for a little bit. That would be 260 to the downside and 290 to the upside. The way that I'm going to play that is I'm going to get in at 260 with a tight stop loss at $259, because if we close beneath $259, then I believe that we are heading to our next level of support, which I've shared with you guys in the past is $245. And so if we get a close beneath $259, I'm happy to get out and let it come down some more. Personally, I think it's probably going to bounce at 260. That's the way I'm playing it, but you do you. This is not a suggestion for what you should buy, sell, or hold. This is what I'm doing with my money. It's for educational and entertainment purposes. All right, Apple stock. This is one that I'm kind of getting excited about. We had a nice payday when it ran up the other day, and I'm looking for a repeat. Now, this is the number 2 stocks that institutions have been buying options for. Some of those options could be to be buying protection to the downside as we move towards earnings. Some could be the belief that we're going to be popping up higher and it's time to increase their position. There were 47,000 options traded on Apple today. I gave support the other day at $188, and I think that it was too conservative, so I'm looking now more closely at the range of $191. I'm going to begin to phase into my position from 191, and if it goes down to 188, I would still be buying. But largely, I am concerned that if I didn't get in at 191, I would not be able to get a position at all because it might not come down much lower, but we've got to wait and see. This is my game plan that I'm watching. All right, 194 is the clear resistance, but here's the target I want you guys to keep your eye on. It's when we get a close above 196 and 40 cents, because that's the bigger resistance. But if we can get above it and we can close, often it'll back test it for a little bounce, but if we can get above it and close at 196.40, then we can get our push much, much higher above $200. I also want to point out that on the Apple chart, we really haven't lost any momentum. We had a little spike up testing the top of the range. Today, we've got an increase in trade volume, so even though it's moving a little bit up, a little bit down, the volume overall is still increasing, showing that there's still strong momentum in Apple stock. Okay, my big boomer stock pick of the day, it's not a buy yet, and here's what I want to point out to you guys. Why I'm interested in this is if you go back and you look at Johnson & Johnson and the stock I'm about to give you guys, when they were previously down in the gutter and on their lows, they traded opposite to the big tech companies that were up at their top in November and December of 2021. So in November and December of 2021, they were doing really, really badly. But when big tech began to fall, that's when they went on a long-term run up. And I think the exact same thing is going to happen here soon. I see them getting very close to their support, down on their lows, and I see that big tech is very much up against resistance, up at its top. And so I'm wanting to keep an eye on this so that I can do what we talked about at the beginning of the video, rotation into healthcare and more profitable stocks when the big tech stock run cools off. A lot of you guys are not going to know what to do with yourself when Tesla's not screaming forward. You're going to go, what do we do, Josh? What do we do? Well, we're going to rotate into healthcare. We're going to get in at the bottom and we're going to run it up for the next 6 months and make a ton of money with what I'm going to call the boomer stocks, the non-sexy, non-industry changing, non-tech, non-AI stocks. That's what we're going to be looking at to make money, because this is about money, guys. I'm going to call this the boomer portfolio, and one of my favorite picks besides Johnson & Johnson would be included in the boomer portfolio. Now, these are not ready to run. I think they're coming down still, but they're getting ready to run, and I'm going to give you guys the one that I'm most interested in, and that's Bristol Myers Squibb, ticker BMY. I'm going to go more in depth on this at a later date, but let me just talk to you guys about some of the basic technicals that tell me that it's getting bullish. It's been dropping for a long time, and the volume is decreasing and decreasing and decreasing, which signals a coming reversal. I see that there is a trend support at $60. Okay, that's a trend support. And then I see a historic support at $56. And so I would naturally be considering an entry position between $60 and $56 $56, depending on how patient I want to be and exactly what's going on at that moment. If we hit 60 and I think that big tech is still got a few more days to push up, then I will be watching for it to come down to a minimum of $56, but I'm probably going to enter Bristol Myers at $56. Now, interestingly, their earnings is next week, Thursday, and so that may cause the stock to pop up a little bit. Not sure. I really don't know what it'll do. It could sell off, but if it did sell off down to my $56 level, well, I would be a buyer because I think the long-term move could potentially be higher. I get asked a lot about long-term plays. Well, there's a long-term play for you guys that I'll probably get into, the shares, and I'll probably hold for 6 months or even a year. All right, let me give you guys a final thought overview going into this next week. I do see a pullback today through Monday, possibly even as long as Tuesday. We've got big earnings next week, like I talked about, as well as big market data coming out. Popular stocks and the overall market is still moving up right now. That's what we need to know. But let's get back to a reality check. It's not moving up on valuations. It's currently moving up on sentiment. That's what's driving it higher. It's enthusiasm. It's the AI dynamic that's continuing to pump these stocks and get us through these earnings, as well as the fact that all of the CEOs of these companies are going to try to do the very best they can to squeeze out some form of a bonus this year in 2023 when they think they have the opportunity. They're going to put their best foot forward because, as a lot of us believe, that we do have a recession coming around the corner. When exactly it's coming, I don't know. We have that inverted yield curve that's not going to end up being wrong. I don't know how far along or how far away the recession is, but these CEOs are going to squeeze every ounce of profit out of 2023 so they can make their big bonus. Maybe they'll have to hibernate for the next couple of years while the markets are processing a downturn, but it's not in 2023. This is going to be a bonus year for these guys, and that's why there's going to be tons of AI pumping. That's what's driving the stocks higher. Sentiment, not valuation. One of the other points I want to draw out for you guys today is that we are not in the AI bubble. The AI bubble has not been formed. Nothing. This is the beginning. This is the birthplace of AI. This is where just the foundation for the AI bubble's being laid. We are not in the AI bubble yet. AI is absolutely just beginning. I mentioned the other day in the live over on Keenan Grace's page that Apple was getting ready to announce that they have been secretly working on a very large AI deployment to rival Bard, to rival OpenChatGPT. Then we're going to go into a round of seeing how AI can drive profit margins. So there's going to be a ton of room for this so-called AI bubble to form. It has not even been formed yet. And I'll just leave with this final thought. You guys, you've heard it said a million times, the market can remain irrational longer than you can remain solvent. So don't. I get asked a ton, Josh, is it time to load up on the VIX and load up on the SQQQ? Now, you do you. Those could vacillate for some profit, but overall, the market's not giving me that signal yet, so I don't believe that the upward trend has changed just yet. And if there was a single stock that I was going to watch to be able to answer that question for myself, you know it's going to be Apple stock, and we don't have the final word or verdict in on Apple stock yet. Earnings is not this next Thursday, it's the following Thursday after that, and I think the markets will, in some cases, they'll go sideways. We're going to have winners and losers, and I'm going to stay in a bullish sentiment for sure in that time frame. Guys, thank you for joining me today. Thank you for hitting the like. Thanks for hitting that subscribe. Don't forget to hit that YouTube notification bell to get announcements for my coming videos. I don't want you guys to miss them. Sometimes I get comments. Someone will say to me, they'll reference a video I did weeks ago, and they'll say, Josh, didn't you say this or that? Well, listen, a lot happens in these markets each and every day. If you've not been watching each and every video, you're going to miss some of my calls. Hope you guys can join me in the next one. As always, peace and blessings. Take care.